Hello traders, welcome to the Advanced Technical Analysis course on the first module, Technical Analysis 101. On this lesson, you will learn how to use and draw levels, trend lines and channels. And we're going to jump right into the MT4 platform because there's no better way to show you this than actually doing it. Okay traders, we are back and here we have the GBP USD daily chart, and the first thing we need to go through is what levels are we going to be using. There are a lot of technical analysts out there that will tell you that you need to draw every and single one of the support and resistance levels on your charts, and I'm here to tell you that this is wrong. You only need to draw the important levels on the daily and 4-hour chart, because if you start drawing every single level from the 4-hour chart to the 15-minute chart, you will end up with a lot of lines on your chart, and you will be unable to take a profitable trade and to let your profitable trade run. Okay, so I'm going to guide you step by step on what to do when you are in front of a naked chart just like this one. And remember, here we are just going to learn how to draw them and use them. So the first thing you need to do is go to the daily chart and look for the first high if you are in an uptrend, and or the first low if you are in a downtrend. Why are we looking for the first high and the first low? Because remember that in an uptrend, the supply areas get taken out, and in a downtrend, the demand areas get taken out. So we are going to draw levels that might get taken out, and levels that might hold. So here we are in an uptrend, and you can see here that this area right here is being tested very strongly, okay? And you can see that here we have a long wicked candle that goes all the way up here. That's a huge wick, a 77 pip wick. This means that this candle opened right here. Price moved about 94 pips to the upside, and then closed just 16 pips from the opening price. This gives us rejection, guys. So you can correctly assess that here we have a strong resistance area. So you're going to grab your horizontal line tool, and you're going to draw a horizontal line right at the body of the candle. We are going to use the bodies of the candles for our horizontal lines because the rejection or the weak highs really don't matter to us in support and resistance, okay? And they do matter once you take the trade, because we are going to use them, the highs and the lows, as our stop loss levels, but we are going to go through that on another lesson. Okay, so if we continue with price action, I mean, you can see that we do have some support and resistance levels, but they are very mild because they get taken out very quickly. And this is what I'm talking about, guys. You need overall levels, you need big levels, you need levels that have been tested countless times, and levels that were tested as support and now being tested as resistance. This is not the case. You can see that we went all the way up here, and this candle closed above our level of resistance, but did not take this high. And then just after this candle, we have a huge 140 pip candle to the downside. Okay, I mean, this is what we call a fake out. And like here, right here, we have this long wicked candle, 156 pip candle with a very small body that signals rejection. And right now we are using this level of resistance as a trading level because we can short this currency pair with it. Now we are not only going to use support and resistance levels to short. we are going to use trend lines. And because right now we are in an uptrend, we are going to go from this low to this low right here. Okay, now this is how you draw a trend line. Okay, I mean, you can certainly draw. Let me thicken this out for you guys, because we are going to be looking at this very closely. Okay, we can certainly draw this trend line from this wick low and through these wicks right here, but as you can see, this trend line got taken out before moving up, so this trend line is not valid anymore. You need to focus on valid trend lines that have not been taken out just yet. And here you can see that we have 1, 2, 3, 4 weeks, 5 weeks with this 160 pip candle to the downside, and this is a huge candle. You can see that the bearish pressure after this rejection is enormous. So when we break, but the candle did not break with the ascending trend line, so shorting at the end of this candle will be a terrible idea. Why? Because we are in an ascending resistance. Remember that trend lines are just not lines that you draw on your chart, but they are ascending resistance and support. Okay, now what you need to wait is for a breakout, a retest of this ascending trend line, or this ascending support as resistance, and right here when we test it, we have an entry to short the GBP USD. And this is basically how you use levels and trend lines to trade currency pairs. And of course you can use these methods, or well, you can use this on any asset, and you will use it on any asset that you are monitoring or that you want to trade. And this is, and guys, this is just basic support, resistance and breakout strategy. And when we have breakout, we have momentum, in this case to the downside. And if you want to move things further, you can see that we were actually in an ascending channel. Okay, you can clearly see that from this low we retested this. What I did here, guys, is I just grabbed this trend line and made a parallel line, okay, to make an ascending channel from this low. And you can see that we clearly rejected it, tested it, and which is now the top of the channel before coming up and before rejecting this area of resistance, the top of the channel, and finally the breakout, the retest, and the flush. And this trade would have yielded at least 400 pips if you know how to hold on to your winners. And of course, if you are one of these guys, or one of these, or if you listen to one of these analysts that draw support and resistance levels anywhere, you might just have gotten out 100 pips out of the move. But this is another thing. Okay, here you have to make sure to draw this level of support. Okay, why this level of support? Because it's the previous low that we made before rejecting this high. So we can fairly assess that this is a range. Okay, and the range is big enough to play this rejection, this breakout. And as you can see here, when price comes all the way down to this resistance area at 58.40, we have some indecision candles. Okay, and this is, I mean, this is great, because indecision candles not always mean that price is going to reverse. Sometimes indecision candles means that price is going to continue, but we need a consolidation period, which is what is happening right now, before moving lower or continuing with the flush in this case. So an idea here would have been to short right here at the retest of this ascending support as resistance, and then take half of the position with a 290 pip win. Move your stops here above this area of immediate support, and let the rest run. Okay, and this is basically how you trade off levels. I mean, you just have to make sure to use the correct levels, because if you were using this level, for instance, as your first target, that would have been horrendous, because this is not an actual level. Well, it is a level of support, but it's not a strong level like the ones that I showed you. Okay, guys, this is just the test back before the retracement, and you see clearly that the first candle crosses below this low, and we make new lows. So the actual first target would have been here at this low, and let the rest run. And if you are okay with holding, you could have yield another 700 pips. Okay, but most of you guys would have been okay with a 290 pip win, and I don't blame you, because that not too many traders can hold trades for a week for a 300 pip win. But basically this is how you use it, and you just have to test and rinse and repeat, and just draw your overall levels, your trend lines, and trade the breakouts with momentum.